In this video, I am going to explain about GST. First, some background, then what is GST, features of GST, does GST apply to me, tax slab rates of GST, registration under GST, negatives and positive, and finally conclusion. To know about GST, first some background about GST. India has a very complicated tax system. It is quite difficult for businesses and startups to navigate through various taxes. In simple words, we have two types of tax system. Number one, direct tax system. Number two, indirect tax systems. Direct tax directly impact the taxpayer, such as income tax levied directly on the taxpayer, and wealth tax, which is just like a property tax scrapped after 2015. Indirect tax system includes taxes which impact the consumer after a number of stages, such as service tax, VAT, custom duty, excise duty, and more. The working and composition of direct taxes is simple, whereas the working and composition of indirect taxes is highly complex because in some cases more than two or more taxes has been included, which not only makes it really complex for us but also has been discomfort in attracting foreign investments. This was one of the core reasons why we need such a big change in the system, and GST is an answer for that. So let us know something about it. So what is GST? Goods and Services Tax initially began as an idea of the Vajpayee government, went on to make way through the both terms of Manmohan government, and finally got its full structure build up and final completion under 3 years of Modi government. GST, as we all know, is a compilation of all types of indirect taxes being laid by various states and central government into one tax. It is basically having the soul of the previous VAT system. Now let's quickly switch to features of GST. Number 1. It combines all the state indirect taxes like purchase tax, entry tax and VAT, and central taxes like central excise duty, custom duty, services tax, etc. Number 2. 4 tax slab rates are fixed, that is 5%, 12%, 18% and 28%. Number 3. Separate tax rate for precious metals like gold. Number 4. Previously under VAT, there were separate VAT laws for different states, which allowed different rates of taxes for the same product. Now under one common law of GST, there is one tax rate throughout the country for the same product. Number 5. Cess over a peak rate of 28% on specified luxury and sin goods. That means you have to pay more for your alcohol, cigarette and luxury cars now. Number 6. Goods and services are likely to carry different GST rates. Number 7. There are 3 divisions. First, CGST, that is the revenue to be collected by the central government along with SGST. Number 2. SGST, revenue to be collected by state government along with CGST. Number 3. IGST, revenue to be collected by central government for sales from one state to another. CGST and SGST will be levied together on a sale for within state, and IGST will be levied by central government for sale outside state because it is a destination based tax system, that is taxed where sold. Since two states are involved, the manufacturing states loses its revenue share in sales, which is taken over by the sales states because IGST is the sum of CGST and SGST of the sales state. So now the big question, does GST apply to me? Yes, GST is applicable to any business or person irrespective of turnover if you fall into the following categories. Number 1. If you are an interstate supplier of goods or services. Number 2. If you are a supplier and has no fixed place of business, that is casual taxable person. And if you have no fixed place of business in India, that will be under non-resident taxpayer. Number 3. If you are an agent or similar person acting on behalf of supplier. Number 4. If you are paying tax under reverse charge mechanism. Reverse charge mechanism means where a person is receiving the goods services has to pay the tax instead of the supplier. Number 5. E-commerce operator and supplier aggregator supplying services under his brand name. And of course finally, if your aggregate turnover is rupees 20 lakh or more or rupees 10 lakh or more for northeastern and special areas. For this purpose, businesses include trade, that is sales and purchase of goods, manufacturer, one who makes any product, for example Nestle, and profession like doctor or CA or civil engineer maybe, and vocation like dancing or singing even. And persons include individuals, any single human being, Hindu undivided family governed under HUF Act, company registered under Companies Act like limited liability partnerships. However, GST does not apply to agriculturists such as florists, horticulture, sericulture, and one who raises the crops, grasses, or gardening procedure. Now let's talk about tax slab rates of GST. First 5% for edible oil, sugar, spices, tea, coffee, coal, etc. 12% computer, processed food, hair oil, toothpaste and soaps. 18% for capital good and industrial intermediates. Next 28% luxury and sin items like BMW, cigarette and aerated drinks. So the question is, what will be cheaper? So the cheaper things will be edible oil, sugar, spices, tea, coffee, whose rate came down from 9 to 5%. Coal from 11.69 to 5%. This will be a big boost to industries depending on coal. FMCG like hair oil, toothpaste, soaps, Fair and Lovely, etc. will come down from 28% to 12%. Speaking about capital goods and industrial intermediates, there will be a big boost to local industries and positively impact domestic manufacturer as seamless input credit will be available for all capital goods. Small entry level cars, SUVs, car batteries, etc. will be cheaper too. Entertainment tax will come down, so movie tickets will be cheaper. There is also an exemption. Petroleum, liquor, instant food items have been exempted from GST. And now what will be costlier? Cigarettes, tobacco, commercial vehicles, mobile phone calls, textile and branded jewelry, luxury items like BMW and high-end motorcycles, and even precious metals will become costlier now. So what about registration or migration to GST? Registration is mandatory for any business or person as explained earlier with a turnover of Rs 20 lakh or more, 10 lakh or more for northeastern states. There will be a permanent account number provided by Income Tax Authority of India and is compulsory for GST registration. Migration means a legal business entity need not apply for new registration under GST. All existing registered under Central Excise and Customs and having service tax registration number under CBEC and VAT dealers will be migrated to GST automatically. To migrate to GST, the concerned entity would be provided a provisional ID and password by CBEC, State Commercial Tax Departments. They will have to visit gst.gov.in and fill Form 20 along with necessary supporting documents. Provisional IDs would be issued to only those entities who have a valid PAN associated with their previous VAT, excise or concerned registration. But if someone starts business for the first time after GST has been implemented, then the person has to register newly under GST through an online platform called GSTN, that is Goods and Services Tax Network. The government have set up GSTN, non-government private limited company promoted by central and state governments with specific mandate to build up IT infrastructure and services required for implementing GST. Now there will be something provided called GSTIN, Goods and Services Taxpayer Identification Number. So for any dealer tax registered under state VAT law, a unique TIN number is issued by respective state tax authorities. Similarly, a service provider is assigned a service tax registration number by CBEC. But now nearly 8 million taxpayers will be migrated from various platforms into GST. All these businesses will be assigned a unique Goods and Services Tax Identification Number known as GSTIN. Now talking about negatives and positives. So immediate impact will be inflation as prices of daily goods comes down. With three divisions such as CGST, SGST and IGST, it is still a complex taxation systems, whereas many countries have only single GST type taxation such as France and China. Liquor and petroleum are exempted from GST as many pundits feel that these are major income sources of the government and it is being done to funnel away the black money. And if we talk about positives, there is a relief for businesses from filling up for different taxes and paperwork are reduced. For households, previously under VAT, there were separate VAT laws for different states which allowed different rates of taxes for the same product. But now after GST, there will be one common law and one rate throughout the country for the product. For traders, reduction in multiplicity of taxes, simpler tax system and scrap double taxation. For consumers, reduction in price, transparency in tax systems, increase in employment opportunities. And finally, the conclusion. GST will bring a new phase to the current Indian taxation system. It is a landmark decision, just like demonetization. Simpler tax systems, uniform prices throughout the country, and cheaper daily goods for households are a key gifts of GST. It will unify the whole taxation system in India, giving the startups equally beneficial environment for business and growth throughout the nation. So let's support government's efforts for a better India and keep educating ourselves and share our knowledge we have got on GST. So with this, we come to the end of our video. Please provide your comments in the comment section below. And if you like our video, do share and don't forget to click the subscribe icon. Thank you.